Hello guys, this is FairBuyNowOptions.com, and I would like to discuss a bit the US dollar Canadian dollar today. As heading into next week's trading, I would say this currency pair is quite bullish regardless of the aspect of a rising wedge that you see here. I would say that we are, let's say, at the cross point here, and the fact that we are positioning like that, or extremely aggressive, into the FOMC meeting or the FOMC statement next week represents as bullish a sign as it can get. I would like to add the fact that this move that started from here is nothing but a five-way structure that ended here, and this will be the end of an impulsive move. What is this five-way structure? Well, this five-way structure goes like this, with this being the first one, then two in a running variation, then the third wave, then the fourth wave in here, and then the fifth wave here, and this is being called an impulsive move with a fifth wave failure. This would be, if you want, only the first wave, of an impulsive move. That being the case, we should look now at the second wave, but the second wave, I would say, is going to be done only here. You might say, oh my god, this is crazy. How can the second wave be done exactly at the highs? How can the second wave can go at that moment of time? Well, this is again being called a running variation, and it goes like this. The whole pattern here, the whole corrective wave from here to here is nothing but a double three running. It should be labeled like this. It should be labeled with A, B, C. This is the first correction. Then you need an intervening X wave, which this intervening X wave may end up here, or may end up here, or may end up here. It doesn't really matter. The intervening X wave, like this, and then a contracting triangle. I would say A, B, C, D, E, and then we are about to break higher. This is one option, if you want, or this is one possibility. This is the contracting triangle to go from here to here, A and C. Let's make it a bit bigger, and the B to D trend line, of course, like this. And now all eyes should look at the B2D trend line to be broken, basically on a move above 112.50. That is going to happen something like 20 pips higher than the current levels. Otherwise, it may end up also having an X wave here, and then a triangle like A, B, C, D, E, which it may be or not, but it doesn't change with anything what we should expect. We should expect now a move, an impulsive move, that should go 161.8 extended when compared with the first wave here, and there you go. We should go and take a Fibonacci and take the 161.8 and project this area by the moment that the triangle is going to complete. This is 161.8. we should put it at the moment that the triangle is completed, and normally that would be the target. Now if you go and look at the result, we're talking about a move above 1.17, and therefore taking into account or putting fundamental analysis near technical analysis, we can only buy call options on the US dollar and Canadian dollar heading into FOMC. It means that the FOMC statement is going to be bullish for the dollar, and we are there to trade that up. So looking to buy call options with end of week expiration date. So that means that we should buy the call options by the moment the by the moment the equity markets are going to open on Monday. So looking to buy call options at the opening on Monday with end of week expiration date, of course. Thank you very much for being here. This is FairBuyNowOptions.com. Let's see if the market is going to confirm our analysis here, and if the US dollar is going to be bid like we are expecting it here. Thank you and bye bye.